Hello everyone, welcome to the Ichimoku daily analysis for gold for Friday, February the 19th, 2010. Well, a very similar type of candle to the previous day, a large spinning top type candle with a large shadow on the top and the bottom, and that represents downside price rejection and then upside price rejection. So we have a market where there was a strong battle between the bulls and the bears for the day. That battle between the bulls and the bears was resolved to be slightly in favour of the bulls. We have a green-bodied candle, so it means that the buyers made net bullish progress on the day between the open and the close. They've closed with weak control of this market, fairly weak, but certainly the bears have not taken control of this market. And they showed some commitment, although they did lose substantially a large amount of commitment as the market traded up towards the highs. Certainly no strength from the bears in this market though. Now technically we had a change of trend as well with a higher high and a higher low. So the market has just taken out the previous high and the low was slightly higher than the previous low. The market is, however, trading within a congestion area now. And we have a well-defined area of resistance and a well-defined area of support. Support is at 1100, so that's crucial for this market if it does trade to the downside. To the upside, the well-defined area of resistance is highlighted by the Kumo, or the cloud. And we know that the cloud can act as support or resistance, and certainly in this case, as the market attempted to trade up right to the top of the cloud, the sellers came in and sold the market off. Now, there is strong potential for the market to trade up through the cloud. The cloud is very small. This is the smallest amount of cloud that the market has interacted with for quite some time. And it's actually where the twist of the two indicators that make up the cloud, where that occurred. So there's a very small amount of resistance here. Now, if this market is going to trade to the upside, then it has its greatest chance of breaking out above the cloud at this stage. As we trade further and further during the week, then the two indicators become further apart, so the amount of resistance offered by the cloud becomes greater, and therefore it will be harder for the market to trade to the upside. The market is still trading down below the cloud, obviously, and that tells us the market maintains an overall bearish bias. So if the market breaks out to the upside above the cloud, then the market will attain a bullish bias, and that could be significant for this market. The market is, however, trading up above the Kijun-sen and Tenkan-sen, which means that the market's bullish, and the Tenkan-sen is below the Kijun-sen, although they're pretty much at the same level, and it looks like they're about to cross. So there could be a cross of those two indicators over the next few days, especially if the market trades up to the upside. That will be a buy signal in Ichimoku terms, but because that signal will be occurring down below the cloud, it's only a fairly weak signal. So we need to be a little bit careful taking a signal like that as a buy signal if it occurs down below the cloud. The strongest crossover would be up above the cloud, and that would be the one that we would have the most confidence in. Any crossovers that occur within the cloud would be more so neutral. No, certainly not as strong as above, certainly not as weak as below. Combined with the fact that if we do have the crossover and if we do have a solid bullish breakout up above the cloud, then that could be a fairly significant move for this market, and the market may go on with it and may appreciate at least up to around the 1163 area, which was the previous swing high. So there is potential there for the market to do that. To the downside, obviously the market is bound by this 1100 support area, and also the Kijun-sen and Tenkan-sen will offer support, and that's very close to that area. That's around 1095, 1094. Below that, there's very strong support down through 1080 down to 1066, and certainly down to 1044. So there's very strong support to the downside for this market. Little resistance to the upside. So if the market does break out to the upside, then there is potential for large gains.